the Money is made possible by financial support from Old National Bank and Chicagoans like you. Thank you.
Good evening, Chicago, and welcome to In the Money. I'm your host, Tamara Durbin, and I'm grateful to have you join us for this week's important conversation, taking care of the business of life, taxes and estate planning. Benjamin Franklin famously said, "In this world, nothing is certain but death and taxes." And isn't it interesting that these are two topics many of us avoid, even though they're unavoidable? Since we know these are inevitable parts of life, it's crucial that we take the time to plan for them. Let's start with taxes. No matter where you are on the income spectrum, having a solid tax strategy can help you save money, reduce what you owe, and even improve your overall financial health. And when it comes to estate planning, it's about more than just writing a will. It's about ensuring that your loved ones are supported, your wishes are honored, and your affairs are settled with clarity and care. This week, we're diving into these essential topics with practical tips and expert insights. So grab your notebooks and get ready to take some notes, because this episode is all about empowering you to take control of two of life's biggest responsibilities. By the end of this conversation, you'll have actionable steps to improve how you manage your taxes and start or even refine your estate plan. After the break, I'll be joined by attorney Tiffanie Powell to discuss our first topic, estate planning. Stay with us.
Hello, I'm Robin Robinson. This week in other news, I'll sit in conversation and community with Domiti Pongo, an investigative journalist that masters the art of storytelling without compromising the truth. We'll discuss what we all need to know about today's news and how to spot fact versus fiction. Join the conversation on CAN TV Cable Channel 19 or stream live on cantv.org or on the CAN TV Plus app. Hyperlocal news and critical analysis. Experience the power of community television.
Welcome back. My first guest is estate planning attorney Tiffanie Powell. Welcome to In the Money, Attorney Powell.
Thank you for having me, Tamara.
I'm so glad that you are here today. I want to first off say that estate planning is actually, and as you know, one of my 2025 financial goals. And a part of that, I actually reached out to your office to actually ask you to help me get started with my estate planning process. I thought that just having beneficiaries on all of my accounts was enough. And I quickly found out from first conversation that absolutely that was not enough for me. My first question is, can you explain exactly what estate planning is and why it's important for people at all income levels?
No problem. Estate planning is the most responsible way to manage your assets during your disability or even your death. The reason why most Americans find that it may be income prohibitive is because they don't have an understanding, a full or complete understanding of all the different benefits of estate planning and the breadth of the estate planning process.
I know from the first time I contacted your office, you guys have a very comprehensive intake process. Can you take our viewers through the questionnaire?
No problem. The questionnaire is designed to get you to start thinking about life should you become disabled or pass away. So first we begin with, who are you? Are you married? Are you single, widowed, divorced? Where do you live? Do you have children? Are you married? If you were married, are there children that's in the marriage? Are there children from prior relationships between you and your spouse? Also, we talk about guardianship. What would happen to you if your children are minors and you passed away or became disabled? Who would you want to care for your children? The other questions also go into your family and background, as well as in terms of if you have grandchildren, who your siblings are, et cetera, because those people may be pulled into the estate plan. And we also ask about who would you want to be responsible to manage your affairs. So we ask for potential persons to serve as an executor of a will, powers of attorney for property, health care, et cetera. We ask all of that before we get to the money questions.
Right, so that's why I wanted people to hear this, because there's a lot of things that have nothing to do with the amount of assets that you actually have that are crucial to the estate planning process. So I just wanted you to, in general, kind of walk people through this so they say, oh, okay, yeah, I think I do need that. Going with the money part.
Well, the money part tells me what pots of money do you have. So it's more than is it just your bank accounts? Do you have money market accounts? Do you have retirement? Do you receive a pension? It also talks about real estate, life insurance, disability insurance, and a lot of those things that we don't think about, like small brokerage accounts. Some people like to do E-Trade, Bitcoin, and other things like that. We make sure that we figure out and flush out all your different assets, including if you have corporations, LLCs, and the like, because the more information that we have for on you during the estate planning process, the better able I am to design an estate plan that comprehensively covers your assets, both from a financial perspective as well as personal.
Yeah, that's good. I hope you guys are getting all these gems, writing it down. Okay, this is why I need to get an estate plan. Can you tell people, like I said in the beginning, like that think, okay, well, you know, Attorney Powell, I have all my beneficiaries on my accounts. Can you tell people just in general why that may not be enough should they pass away or even in case of illness?
Beneficiary designations are a start, but a better practice is to have a comprehensive estate plan. Why? Because beneficiary designations do not take into consideration disabled persons. It does not take into consideration blended families and other family dynamics. What about irresponsible spouses or even young adult children? We want our young adult children to be able to live, but sometimes they are not ready to receive everything that we offer. So estate planning allows you to make better choices and decisions that go beyond beneficiary designation so that you can address these issues now as opposed to later when you may not be able to do so.
And I'm glad you mentioned the part of not only just designating who you wanted to go to, but the part of are they able and responsible enough to receive all that you're, because I know that was a conversation, you know, we had that I didn't even think about. Oh, I guess I should think about that. So thanks for bringing that up. Can you tell our viewers the difference between a will and a trust, and maybe in general, how do they know which one is best for them?
Well, determining whether you need a will or trust will be individually based on your goals. So a will, just simply put, is a document that takes effect at your death that determines how your assets will be controlled and distributed. A trust does the same thing. However, a trust takes effect upon the date of execution, through disability, through death, and even beyond. It gives you even greater leverage to be able to determine if you want to leave a trust for children, for example. Whereas with a trust is private, meaning that it's not recorded in the courts or with a clerk's office. A will is not. It's a public document. So anyone can go and pull a copy of your will. So a lot of people meet with me because they do not want to deal with the will. Why? Because it is a probate process attached to it. You would need to submit it to the probate process, bring it before a judge who would agree that it is appropriate in form and substance to admit it into probate and begin that type of legal process. If you have a trust, you don't have to do a legal process of that nature.
And that's why it's important to consult with someone so that you can really explain what your personal situation is, and they can give you advice based on what your individual circumstance is. So I'm glad that you kind of went into that. And I know that, you know, when you talk about estate planning, a lot of feelings come up. And based on some of the things that you actually have to designate in the process, you do have to have conversations with family members and potentially friends. What advice do you give them on how to have those conversations?
The first thing is to be honest. Tell them how you feel about a circumstance and ask them, what have they done? Because sometimes we erroneously believe and make assumptions that our loved ones didn't do anything. At least give them the opportunity to say what they have done and give them the space to make the choice. Also, be patient with them. Estate planning, while we do talk about your assets and loved one, they also have to grapple with their mortality as well. So there is a huge emotional component. Give them space to sit with it. In our office, we often see people meet with us and they boomerang back. They could come back 2 years, 5 years, 6 weeks. It doesn't really matter. It's when they're ready to deal with it, then we're ready to serve.
So this is another quick question. Do you have any free or low-cost resources if people aren't able to engage an attorney right away that they can go to actually start to look at the estate planning process?
I would recommend you take a look at some of the resources we have online on our website. I do a lot of videos where I talk about the estate planning process and I address a lot of the different circumstances that you might find as you prepare for estate planning. I've also done a series of videos for the Illinois State Bar Association and the like, so you can go on those types of websites to locate it. I do caution you from DIY services only because you don't know what you don't know until it's too late to fix it.
Yeah.
And that's scarier than most things. So I would encourage you to meet with an estate planning attorney that you know, like, and trust, of course, and be able to speak with them with them about your circumstance, and then make some decisions on how you want to proceed.
What one piece of advice would you give someone if they're feeling overwhelmed with the estate planning process?
I would say, don't overthink it. Get started right now. Like, go and look for who you can speak to about it and begin to think through what life would be like if you couldn't be here anymore. At my office, we pride ourselves on, we take the fight and the fear out of the legal process. That's what we do at Tiffanie, Powell and Associates. We don't want you to fight with the idea of mortality. We all have to leave. But we also want to educate you to take away a lot of the fears based on misconceptions that could prove harmful.
Thank you so much, Attorney Powell, for being on the show today and giving our viewers such rich wisdom and insight into the estate planning process. So thank you.
Thank you for having me.
After a quick break, we'll go out in real life with tax accountant Nikita White to continue the conversation. In the Money continues on the other side of a short break. Stay with us.
I'm Andy Zopp, the host of Chicago Newsroom 2.0. Every week, we gather for insightful conversations with local journalists and community leaders as we discuss the news of the day and how it impacts the lives of Chicagoans. Join the conversation on CAN-TV Cable Channel 19 or stream live on cantv.org or on the CAN-TV Plus app. Hyperlocal news and critical analysis. Experience the power of community television.
I want to thank you, Nikita, for joining us today on In the Money. Of course, this episode, we're talking about taking care of the business of life. And one of those business areas of life is taxes. What are things that a person should bring or they need to bring to their tax professional during tax season?
I get that question all the time. People should bring all of their income and their eligible deductible expenses with them to the tax office. First and foremost, if you receive an envelope in the mail, and I've got one here, if it says important tax information enclosed, that's the number one sign that you need to bring that with you. Also, in today's time, a lot of employers and companies are sending tax forms electronically. So you want to make sure that you have access to your email, that you're able to download those and bring them with you to the tax office. It will help the process run more efficiently, because when you get to the tax office, you don't want to be fumbling around with your phone or trying to remember passwords or reset passwords, but you definitely need all proof of your income.
You mentioned eligible expenses. Can you name a few eligible expenses? Because sometimes people don't know what can classify as an expense.
Yeah, so there's deductible expenses. For example, if you own a home, you can deduct your mortgage interest. The bank that you have your mortgage with, they should send you a form that shows how much interest that you pay throughout the year, as well as your property taxes. Another one would be charitable contributions. If you donate to charities, church, or a 501c3 organization, they should also send you a letter letting you know how much you gave throughout the year. Bring that with you because every little bit helps.
What are the must-know basics that can help people avoid surprises and feel more confident about managing their taxes?
One of the things to avoid surprises is to definitely make sure that you keep good records throughout the year. You don't want to fumble around at the end of the year and miss out on different eligible deductions because you didn't have good record keeping. Good record keeping helps make the process run more smoothly.
And I think people don't realize that if you kind of do a little bit throughout the year, it helps and you don't feel so overwhelmed, like, oh my God, I got to pull all this stuff together.
Yeah, because there are a lot of softwares that you can use now. Some of them are app-based where you can upload receipts to your phone. Gone are the days when you should come to your tax office with a shoebox full of receipts. But you should definitely, every month, just as you would take care of all of your other financial responsibilities every month, you should also make sure that you start to itemize anything that you are either bringing in as income or spending as expenses every month as well.
Now, we know tax season is a yearly event. We know tax season comes every year, but planning for it can be ongoing. When do you recommend people start actually planning for a tax season?
When you come to the tax office to file your taxes, so for example, right now we are filing taxes for 2024. That year has ended. That's not the time to start tax planning. Right now, you should be planning for 2025, the year that we are in, and you really should have started that planning before January 1st.
And what are some strategies that people can do throughout the year that can help them to reduce their tax liability and also potentially keep money in their pocket?
The first thing that you should do is check your W-4. If you work for a W-2 employer, check your W-4 to make sure that you have the appropriate withholdings being taken out before that first check of the new year. Also, something that you could do is to either increase your charitable contributions if you know that you need more deductions in order to write off your income. You can increase your donations. You can also put more towards retirement savings.
Can you say it again?
If you want to reduce your tax liability, one of the ways is to do the max at your employer for the year for either your 401k, 403b, whatever retirement vehicle that you have.
Sometimes people don't think about taxes when major life events happen, like when they get married, have children, buy a home. Even they start doing all these side hustles. They're thinking about making money, but they're not thinking about taxes. How can people proactively prepare for the tax implications of these different life events? Life
happens. Say you get married. Pre-marriage, you should be discussing with your potential mate all aspects of your finances, including their past or current tax liabilities. You don't want to get to the tax office with your new spouse and find out that they may owe the IRS significant sums of money. Because once you start filing jointly, it becomes y'all debt, not their debt. So you want to make those decisions knowing what you are getting into, because that could be the difference between filing jointly or filing separately. Same thing when marriages end in divorce. who's going to claim the children on the taxes. All of those things are important to know because sometimes if that's not discussed, it becomes a race to whoever files first.
Wow.
If you have a side hustle, if you're making money online, you will receive a 1099-K that has that income. You must report that on your taxes. In addition to that, you also need to make sure that you are keeping track of any business expenses that you have in case you want to write some of that income off, because no taxes are being withheld. Having a business or a side hustle is very different because you are responsible for paying those taxes, whether at the end of the year or whether you do it quarterly by sending in estimated payments to the IRS.
And can you talk to the consequences of not filing and not paying?
Failure to file penalties that continue to accrue, as well as interest on the money that is due to the IRS that continues to accrue. And so if you think that by ignoring the IRS that it's going to go away somehow, it won't. It will just get bigger and bigger and create different problems. There are some income that you receive that may be subject to garnishment. And so if you have been, avoiding the IRS because you owe, they may start to garnish your wages on your job. They may withhold other benefits that, you thought were coming to you. And it happens to people because they fail to take care of the business up front.
Every community has a story, a pulse, a voice waiting to be heard. At CAN TV, we bring these stories to life, from the heart of Chicago to your living room. Join us in supporting hyper-local television. Your backing helps us cover what matters directly in our communities, unfiltered and upfront. Help tell the important stories of our communities. Become a program underwriter today.
Welcome back. Joining me back in the lab for this week's Money Matters is Old National Bank's Director of Financial Empowerment, Ben Juergens. Welcome back, Ben.
Tamara, it's good to be back.
Yes. So let's continue our conversation talking about taxes and estate planning. So Ben, most people think when they think of their banks or their financial institutions, they think about checking and savings accounts. But how can financial institutions actually help people with their taxes or even their estate planning needs?
Yeah, it's a great question. Banks are always going to be good for deposit accounts, right? Checking and savings. But there's so much more than that banks can be on your side for and be your partner. Mm-hmm. And one of those is the estate planning and taxes. Is we think about long-term things like, I've got 4 kids and I think, how do I want to leave stuff behind, but maybe not pay as much tax, right? So they can help with things in advising of, whether it's a will or a power of attorney or making sure we have life insurance, trusts, things like that. And they can really give some structured guidance so that you can protect those assets for the longer term passing down, but also be able to pay some less taxes as well.
Oh, that's good. So would you recommend that people will go into their financial institution and ask one of those people about what they offer?
Yeah, I think that's the key, is building a relationship with them. So you may be not ready to be in the investing side yet per se, but at least getting some of that advice to say, okay, where do I need to start from? And most of them have connections with insurance agents and attorneys to help with that will preparation. A lot of people just don't know where to start, so that's a great place to begin that conversation.
So if we have those individuals that are, let's say they're living paycheck to paycheck, what would be the first step that you would say they should take at their bank to start or prepare savings or to start preparing for things like tax time and even passing down any wealth or resources that they do have? Yeah,
so if our viewers happen to be in that category of paycheck to paycheck, you're not alone, right? It's like 60-something% of all United States households are in that way. But I think it really starts with knowing where your money's going, right? So go back to the basics of building a budget. Mm-hmm. But call your banker and just say, hey, can you help me put together a budget? Can we analyze my spending? And if your bank doesn't have time for that, I would probably find a new bank that would, because they should be sitting down to go with that. And this time of year being tax time, this is the time when people are going to get the most amount deposited in their bank account.
Yes.
If you don't have a bank account, open one because you can get your money quicker and safer. But
Say that again. That's a good thing. So sometimes people don't even think about that with their tax refund, that they can do a direct deposit into a financial institution.
And usually you're going to get it within 7 to 15 business days probably. And if you rely on that check, it could take weeks to get to your account.
Right.
So you're going to get it safer, quicker, and it's a great way to start building an asset, which would be that deposit account.
So let's say, not everyone can afford a financial planner, and you've offered some suggestions for that. What are some other free or affordable tools that financial institutions offer to help people get smarter about their taxes and maybe potentially even estate planning?
No, that's a great point. So like where I'm at Old National, right? We have financial education instructors across our entire footprint that deliver this education on a regular basis. So I say talk to your bank, your financial institution, who you work with, and say, do you have people that can come out and present to our company, for example, for the employees, or a nonprofit or a school, and they can usually hit on all topics of personal finance, including estate planning and tax preparation. I mean, I teach this to the high school kids even. Outside of that, there's great resources online like the FDIC Money Smart program. The government has some websites through the CFPB. So there's a lot of vast information out there, but your bank can also be a reliable source in teaching that education.
And I'll just say this, you said CFPB, so that's the Consumer Financial Protection Bureau.
Yeah,
so
we use a lot of acronyms in banking, so I need to make sure I state that,
We want to thank Ben for being here today. On the other side of a break, we'll close out the show with this week's Money Moment. We're back in 30 seconds.
Hello, I'm Robin Robinson. This week in other news, I'll sit in conversation and community with Nikita, an investigative journalist that masters the art of storytelling without compromising the truth. We'll discuss what we all need to know about today's news and how to spot fact versus fiction. Join the conversation on CAN TV Cable Channel 19 or stream live on cantv.org or on the CAN TV Plus app. Hyperlocal news and critical analysis. Experience the power of community television.
The book of Proverbs says, a good man leaves an inheritance to his children's children. This timeless wisdom reminds us that creating generational wealth starts with the decisions we make today, no matter where you are in your financial journey. I've seen firsthand the difference between managing a loved one's affairs in peace versus confusion. When you're grieving, the greatest gift you can give those left behind is a sense of peace, and that requires planning. Estate planning goes beyond finances. Remember, it's about ensuring your loved ones are supported and your wishes are honored with ease and understanding. The second order of business is something we face every year, tax season. While it may seem easy to avoid, the consequences of not filing or filing late can be costly. Filing and planning ahead not only keep you on the right side of the IRS, but also opens opportunities to save money and strengthen your overall financial house. So let's commit to conquering these areas of life. Take control of your taxes, plan your estate, and take care of the business of life. You have the power to create a legacy of order, stability, and generational wealth. Before we wrap up, here are your action steps from today's episode. Number 1 is tax season. Start gathering and organizing your tax documents and file your taxes. If you need help, determine the right tax professional for your situation. If hiring a professional isn't an option, explore a tax preparation software or the IRS free services available to you. Number 2, plan ahead. When you file your taxes this year, start thinking about next year's filing season. Implement strategies that can save you money on taxes while helping you build wealth. Number 3, start your estate planning process. Don't wait for tomorrow. Begin creating a plan that ensures you leave a legacy behind of order and care instead of chaos. Remember, it's not about where you start. It's about taking the next step forward. You got this. Join us next week when we'll discuss various pathways to building wealth. We'll also serve up a new Money Matters segment with Ben Jergens. If you have any questions about today's topic or any financial question, send them to me. Email me at tamara@moneybasicsonline.com or follow me on Instagram at IamMoneyBasics. Also follow my guests on social media. I would love to keep this conversation going, so let's connect. Remember, we are on this journey together to get, stay, and grow in the money. See you next time.